then the competition or price drops, I should say, on listings, and that's the second highest it's been. So we really got into a situation where we had very, very, very strong demand, very low time on market. That is starting to correct a little bit. Next slide. And then this is the competition I mistakenly referred to, and we are getting competition. It is coming down, but it's still fairly significant. Next slide. Okay, my least favorite all-time home buyer price index, the Case-Shiller index. Just a real quick comment. I'm going to come across a little caustic and sarcastic here, and I apologize.
That's fine. That's what we do on this channel. We do we do that very well. Go ahead.
Well, the media uses this index, and it's one of the worst indexes there is. A really interesting story here. So it used to be called the Case-Shiller-Weiss Index. A guy named Alan Weiss actually invented the index. When they sold it to S&P, they dropped Weiss's name. So it's the Case-Shiller Index. Alan Weiss is embarrassed about this index. He thinks it's one of the worst things he ever did. And it really is misleading because it shows home price appreciation going up at 20%. And people assume that that is a number that they should use in almost every market. And that's not the case. Next slide. You can see here that the median existing home price has gone up also. Next slide. This shows the median sales price of existing homes May of this year versus May of last year by region. Now look at the difference in both the cost, the median sales price of a home in each region, but also in the level of appreciation in each region. So real quickly, to give you some numbers, May of 21 to May of 22, median sales price in the U.S. went up 14.8%. Median sales price in the Northeast went up 6.75%. Median sales price in the Midwest went up 9.5%. In the South, it went up 20.6%. In the West, it went up 13.3%. So median sales price actually gives you a better indication of the regional differences and also shows that prices don't go up at the same rate in every location like the Case-Shiller Index indicates. Also, I would point out if you break it down by tiers, so in other words, if you look at each market and you will look at the top 1/3, the middle third, and the bottom third in the price range, they go up at different rates in different markets. Interestingly enough, Austin, Texas, and Texas as a whole is one of the few markets in which all three tiers have moved up at pretty much the same rate. If you go to the market I live in, the top tier went up dramatically. The bottom tier went up at about 20% the rate of the top tier. So the Case-Shiller Index doesn't really tell us anything.
Can you explain that for Austin real quick? So all three levels, so you're talking about levels of income went up?
No, levels of pricing.
Levels of pricing.
Based on the income.
No, not on income.
Price
Price
of
the home. If you broke the prices down into three tiers,
okay.
The top tier, middle tier, and the bottom tier, all three tiers have appreciated at the same rate in Austin. And what that tells you is that it's a well-balanced, growing economy and with job growth at every level and with a very low unemployment rate. So it's a very, very strong and positive indicator.
What's an example of the tiers, the three tiers? So
if you say prices between what's the top? Let's say $1 million is on average the top, and the bottom is 300,000. So the bottom tier would be 300 to I'm having a hard time, about 550. Middle tier would be 550 to about 750. The top tier would be 750 to $1 million.
Gotcha.
And so all three segments are going up at the same rate. That means that people at different income levels are all doing really well, and they're all participating in the market relatively the same manner. You go to the market I live in, the high end has gone up like a rocket ship. The low end hasn't.
See, what's interesting about that number is it doesn't account for any, I'll say, institutional or otherwise investors that are,
No,
because this is just home sales, right?
just home sales. Yep. Yep.
What I love about what you just said is that, you know, up until really 2019, I was helping a lot of clients primarily in that 350 and under price point. That's primarily where I was helping a lot of clients. Now it's totally different. I mean, we have a team, I have a team, and we help all price points. So we do a lot of luxury, we do a lot of different stuff. But what's interesting is that all of those clients that I was helping buy homes like 16, 17 through 19, when we're selling their homes right now and they're moving up, like, yeah, it's more expensive, but they've made a big chunk of money selling their home to then go up. So that's partly why you probably have seen people's, you know, disposable incomes go up, because they're selling homes at a much higher value. Now they have disposable income as well.
Yeah, it kind of depends on where you are, but yeah, I think that has some influence. So next slide.
Oh, sorry.
So this just shows you the fact that people have moved less and less. It's really interesting to me because, you know, we got really fixated on the amount of movement occurring because of the pandemic, and there was a sudden surge of movement. It's dying off already. But if you look going back to 1985, the amount of people moving has gone down dramatically, and then moving within the same county has also gone down.
Yeah, I think at California's point, that the investor comment is a big deal. So that was the first thing that popped into my mind. I'm like, if we don't account for investors, or we don't, this guy has facts, all facts. Yeah, if we don't account for investors, that's a big deal.
Yeah, you know,
and move up buyers, like you said.
I found this article that came out, and it was talking about all the institutional buyers that bought in the last since the pandemic. It was like in Texas, it was like 38% or something. It was really, really, really high for some reason. It was that, am I right? And it was like 38. It was definitely over 20%, because we've been looking at numbers for a while saying 20%. But here's one thing that I think that, because I went through and I was going to do a whole video on it. The one thing that I broke down in there, it said a lot of institutional buyers were buying, and it was, you know, it had a lot. The one thing I think it did not have in it was the fact that you had a lot of these iBuyers, because the way they justified or the way they clarified as an institutional investor was somebody that was buying basically an LLC or cash. And I think it wasn't putting in or really accounting for the fact that you had a lot of like iBuyers buying cash and then putting them back on the market. So if you're looking at it that way, of course, there's a lot of people buying and basically flipping as institutional investors, and they're buying property. So interesting note. Thanks for watching this short of the Real Amigos podcast. For more live streams, hit here. For more clips, hit here. We'll catch you on the next one.